Practice isn't the thing you do once you're good. It's the thing you do that makes you good. Malcolm Gladwell. Each and every day, my friends, 10 to 15 minutes. Let's jump into these charts. As we look and get to the end of the week, I always like to compare where we were the prior day with where we are the following. And as I look at yesterday, we were bearish on stocks, on Bitcoin. We were bullish on gold and bonds, and we remain the same. Some of those percentages have lessened with the probability of continued movement in those directions, but we are continuing. All of that is the same. So we are bearish on stocks, bearish on Bitcoin, bullish on 20-year bonds and gold. Let's first jump into the S&P 500. It was down a little bit for the day, just over 0.25%. Yesterday we were at bearish, 75% probability continued down movement. Well, of course, that did continue. It's lowered a little bit to 70%. Our entry point's right around the 564 mark, which is where we close for the day. Exit point 552. Remember, this is bearish. Of course, what can you do if you're not trading puts in your practice trades? Of course, you can always go to SH, which is the inverse. I will put it into today's video, training for those who haven't taken our course on inverse funds, how to make money when markets crash. You need to understand these things. Costs are high. They revalue every day. They can magnify losses, but they can also be a great way, if you start practice trading them and like them, to be able to capture a move when the market's pulling back, as it has been through this fourth week. So where does that leave us? Our back test accuracy is at 68% on the probability, at 70% of continued down movement. Now, to wrap up how we've ended this week on the S&P, we see recent bearish candles on all time frames, breaking below the 200-period moving average on the 195-minute chart, with increasing volume on the decline. So that is keeping us into this bearish down move. Hopefully many of you have been practicing this as it has been underway. Let's move on to the NASDAQ. Where is that? Well, yesterday, 70% bearish down move. It popped up a little bit today, 0.33%. You can see where it, like the S&P, cranked over hard down in the morning, and then it recovered, unlike the S&P, into the positive territory a little bit in the afternoon. Look at these three dojis spinning sideways, staying below the weekly trend line. You can see the volume. We've had decent volume both on the NASDAQ and the S&P on these two-day charts and the weekly charts over the last several days and week in total. Where does that leave us going into this next week? We are remaining bearish, but 65% instead of the 70%, and our backtest accuracy is around 65%. Our entry point is around that $379.50 mark. And we're currently at, I'm sorry, not 379. I'm looking right at it and saying 3, and it's 4. 479. We are currently at 480.84, and we expect a down move into the area of the 468 mark. That's about $11.60-something cents. Now, where are we ending this week? Well, as we look at the NASDAQ 100, we see similar bearish trends to the S&P with a sharp drop on the 195-minute and the 2-day. The volume is slightly less conclusive. That's the reason that we don't have as big a number in the probability of the continued down move. But still, you know, it's again seeming that it will continue to move down in that direction. You know, one thing that's holding back is we didn't hit a lower low this week. So we are keeping that in mind. If you are in a short trade, that is, you're in PSQ on the NASDAQ or SH also, or puts on these two ETFs, index ETFs, then, you know, you might consider continuing that practice trade down. Now, let's move on to an up trade. Yesterday, we had recorded a bullish percentage probability of up movement of 80%. That is lowering to 60% from 80. We were down a little bit for the day, 0.59%. Still, we're still long on TLT. Got an entry point of about, almost $91. The exit about $92.50. So we're expecting an up move on the next 5 days of as little as $1.50. And the back test accuracy, it just keeps clicking down a little bit. It's down to about 60%. So again, we'll keep an eye on things. As we look at the charts, we can see average volume or above over the last 4 weeks. We can see where the last 2-day candle did pop up. We don't have any volume backing that up. We can see where the real pop-up occurred, and that was on Thursday morning, and then retreating since then to below where it started moving up. So again, we're just keeping an eye on things. You know, we had our real strong moves in 20-year U.S. government bonds back on the week ending the 24th of February, 3rd of March, and then slowing down last week beginning the 10th of March. And then this week, you know, it's a bigger candle, a little bit. I mean, not a big candle to speak of. A little bit of down wick there and a decent up wick, but not anywhere near the size of those prior candles, those 2 bigger weeks. And, of course, the wicks that topped out much higher. So we are still in the range of predicted upward movement, but it's now down to 60%. Where are we with gold? Gold pulled back today 0.80%. Again, we still feel strongly about gold, 75% probable upward direction. That is long. We were 85% yesterday. The back test accuracy is still decently high at 72%. But as we look at gold, you know, the consistent bullish trend across all time frames with higher highs and higher lows and volume supports the uptrend. So again, you know, you can look at the way that gold has been moving up. We talked about this yesterday, where back in July, things moved up until the end of October, and in November, steadily moving down to the beginning of the year. And but for 2 weeks, that was the week beginning 24th of February, 3rd of March, where gold slid sideways, gold has just been kicking it up. So back today some, but we're still long gold. Now, lastly, we will move to Bitcoin, and we are still short Bitcoin. Yesterday, we were bearish on Bitcoin 65%. We've upped that to 80% as we move into the new week. Now, we expect to move over the course of the next 5 days down 1.02, $1, just a little over $1, 75% back test accuracy. And of course, as we look at Bitcoin, you can see that the volume has been decreasing over the last many weeks. You can see on the 2-day chart, we haven't had average or above average volume since the 26th of February, but you can see where Bitcoin has been ticking down and just, moving down. As we look at Bitcoin at the end of the week, strong bearish trend on all time frames with a steep drop and volume on the decline, indicating continued selling pressure. So again, as this volume, backing up the move down without a lot of support for any kind of up move, you can see it here. Now, in the last few days, the volume has gone up on the half-day chart. You can see on the 2-day chart, we're again rather lackadaisical when we go all the way back to that February date. So we are keeping our eye on Bitcoin. We are short. You might say, how do I short Bitcoin? Well, one way, again, here's another inverse ETF, BITI. And of course, you can see it in the green as Bitcoin itself has been going down. You can also see the spread's not very wide. What is that, 5 cents on a $25 ETF? That's not too bad. It gets even less sometimes during the day. It does get more also. So pay attention to that. But if you want to practice trade going short on Bitcoin, you find a good entry point, that is something for you to pay close attention to. That is where we are, my friends, as we end this week, go into a new week. I hope you like the approach that we're trying to give you with these percentages. I hope you are subscribing and making use of the trade execution summary grid that gives you all the important numbers, the ticker, the probable direction and percentage of that probability, the entry point, the exit point, the expected move in dollars, and the backtest accuracy in percentage. God bless all the best from the whole team at Charting Wealth.